put it into cash, and that helps us. I don't know. But for all you Forex traders out there, sometimes I get people asking, oh, should I just skip the holidays? Should I skip December since that's historically bad? Or should I skip the summertime? I'm like, no, don't skip anything because sometimes it's bad, but sometimes it's not. And when it's not, the good can outweigh the bad over the course of the long haul. So I'm really not a fan of just taking certain days off, except for New Year's Eve. We always talk about that. And certain holidays and elections, of course. But seasonally, yeah, no, never a good idea, in my opinion. So, okay, super, 11 trades in a row. I guess when you have a 40% win rate, this is more possible. But that really is quite an anomaly. And really amazing that you still end up as far ahead as you did, even after all that. But I want to go ahead and talk about it. This is going to be my favorite part here, I think, is the overall. You said what your worst streak was. Now, the timing of that streak and the timing of your win streak was extremely interesting. Speak to that a little bit if you don't mind.
Of all the things that happened in this experiment, this is the best part of it. This is the absolute best part of it because this encapsulates real trading so well. I talked about our worst losing streak. This 11 loss losing streak happened after our largest positive streak. So remember, the losing streak started in December 20th and went to January 24th. Well, prior to December 20th, we went on our biggest win streak from early December to December 20th. The account jumped by $8,600 or 8.9%. So we had a good run in the first couple trades and we fell back down, and then we had this really big run into the end of the year in December, and then right after that we had 11 losers in a row. That could have happened at any time, but boy, this is really how trading works. The streaky nature of trading, you've got to get ready for it because this is real life. Now, if you screwed up position management, one of the things I've talked about in this podcast is that I'm the most dangerous after I have a big win streak. After a big win streak, what do I want to do? Go bigger. I want to trade harder. I want to trade more. I want to do more. I would have run into an absolute buzzsaw if I got really, really excited and really started pushing my trades, and then I ran right headlong into an 11 loss downtrend. That would have absolutely killed me if I deviated from my system. This is real trading. This is how you're going to feel. You're going to feel like king of the world once you have that streak. But once you've been trading long enough, you know that those are the riskiest moments.
Yeah, it's like my favorite quote from the TV show The Wire. Even if I miss, I can't miss. I have felt that way many times in my career, especially early in my career. I really thought, with a whole 6 months under my belt, that I just found the magic indicator combination that was going to take Wall Street by storm, and I was smart and they were stupid, and I was on the road to millions. And the moment I started thinking that is when I blew out the rest of my entire account. So just remember, especially early on, you are not the shit. You think you're the shit. You are not. Keep it consistent, for Christ's sakes, because there is no holy grail in terms of algorithms. But there is a really profitable, consistent way you can do this, but it involves not getting too high or low and just staying the course no matter what.
Let me finish this little series of events, because just think in your mind, you had this huge run up in your account and then you had an 11 loss streak. Guess what happened at the end of that 11 loss streak? That was when our biggest winner of the entire experiment came. This is where, Patrick, when you say keep swinging, don't deviate, keep swinging, this is the proof. This is the proof of that, where yes, you just got hammered, you just got obliterated, your account is down, you're in the dumps, your confidence is at an all-time low. So many people stop. They jump ship, they change systems, they cut position size, they deviate. Right at that moment, that winner pretty much erased about 2/3 of that drawdown. This is how trading works. And just think about the emotional roller coaster that you would have been on during this time. Run the account up, $8 grand, $9 grand, and then lose it all across 11 trades in a row. And then all of a sudden, boom, you make back a lot of it in one trade right when your confidence is at the bottom. I want you to just put yourself in the situation and think about what would you be going through psychologically during these streaks, and what would you be feeling? Because everything in those periods of time would be to try to get you to deviate from what you're doing. You're going to feel a lot of pressure. You're going to feel a lot of elation, a lot of depression. That little period of time that was just basically a month and a half would have killed most young traders, because right in those moments, they would have deviated.
Yeah, don't stop trading just because you're taking losses. Do not, and I say this so vehemently because what I'm telling you is to not be VP back in 2011, because that's what I would always do. I would get down. I would think the market was just going to go against me forever and ever, and I didn't want to lose my entire account. So I would just stop. And almost every single time. Well, sometimes there would be another loss and it would just justify the move I just made. But soon after, this huge run would happen that my system would have actually called, but I wasn't there for it. A trade that would have eaten up all of those losses and then some, but I wasn't there to trade it. And wouldn't you know, as soon as I got back in the market, I would take another loss. So just no matter what I did, I would lose because I really played this the wrong way. That's why I'm so vehement on this point. And we did say in that episode where we talked about this specifically, if there are things going on in your life or external factors that might be leading to this losing streak, and you're being honest with yourself on this, then okay, then you stop. Diagnose the problem, get it sorted out, and then come back. But for 99% of you, that's not the case. You're just chickening out, or you're just going soft. What you're not doing is sticking with your system. And Rob just showed you that even after 11 losses in a row, I couldn't imagine, that just because he stuck with it, that's when his biggest winning streak came. And so numbers-wise, Rob, you got it all back and then some, right?
Yes, I mean, that big gain helped, but over the next... really, from that low, this account really took off and just kept churning all the way until trade number 100. It's just so important. And I want to go back to just one last thing. Position sizing. This is the thing that allowed, again, this experiment was just going to go on no matter what. But in real life, let me tell you what would have allowed a trader to keep going. Even though they just had 11 losses in a row, position size was 1%. The drawdown was painful over an 11-loss trade. The drawdown was 7.9% from the high to the low. It went from 106,252 down to 98,120. When you look at it that way, you're like, oh, that's not a big deal. I would be able to keep swinging. If my account just went down 7.9%, I would easily be able to keep swinging. I wouldn't feel distress. Here's the problem. When you make your position sizing too large and you get these drawdowns that now become 30, 40, 50, 60%, this is when people can't keep swinging anymore because of the psychological damage. So we have gone all the way back to the very essential thing of trading, that if you don't get this right, you can't make it. Correct position sizing allows you to go through the shit and to still have the courage to trade out of it. If you make those numbers too big, everyone quits. Everyone falters at that moment. It's so important to get position size right.
And so I just want to reiterate, too, if you want to see the details of these numbers in real time, I know it can be kind of hard to process depending on what you're doing. I know whenever I listen to podcasts, I'm usually walking or at the grocery store or something like that. So I'm not really able to process numbers the way I normally would if I'm sitting down and looking at it. So Rob has done an entire video on these numbers, and you can see them visually, and we will go ahead and link that down below in the show notes for everybody to see. And so let's go ahead and sum things up, Rob. Do you want to kind of round up what we've talked about here, or have we already pretty much spoken about it?
No, look, there's more. If you want more numbers, more details, go to that other video. But let's just talk about after this is all said and done. So I wanted this to be out there for the record, for all time, just to where everyone can go, look at it, follow it. You can actually see every 100 trade, where we made it, where we got out, when we adjusted the stop. It has a video about it. I had a whole team helping me out. So all of it's there. What I want everyone to take away from this is number one, consistency beats intelligence every single time. I know a lot of you think you're smart. And guess what? We all think we're smart. If we didn't think we were smart, we would have never gotten into trading. We would have never had the guts. So the fact that we are into trading, we're already thinking we're smarter than everyone else. Guess what? Consistency beats intelligence every single time. If you want to be a great trader, I don't care how smart you are. It's totally meaningless for me. How consistent can you be?
Yeah, smart traders usually have it worse because they overthink things. I see it all the time. Now, you can tell when somebody responds and they're pretty intelligent and very analytical. They sit there and try to overanalyze every single thing you just said. And I have to tell these people, you need to pull it back. You need to dumb it down somehow. Don't overthink it, because that's all I ever did. Pretty much throughout high school and college, even when I would try to do well at a subject, I couldn't, because I would always try to think of exceptions. So when it came to algebra or equations that you would see in chemistry or something like that, I would completely fall apart because my mind just couldn't simplify it the way I needed to. And I've said this numerous times too, because it's an observation I find to be so funny. When you see these like champion traders, these aren't like chess prodigies. These are just your average doofus guys with their, wearing a Supreme shirt and their hat on crooked. Like they're not super geniuses. Super geniuses struggle at stuff like this because they try to overthink everything. Build a goddamn system and just let it do the work. I mean, can't you see with this video in this episode that we're putting out right now that in practice, all you have to do is just not involve yourself and really good things will happen? I mean, we've taken a money management strategy that is probably half of what most of you guys are using and have limited it, pretty severely, and even it is able to crank out a 15% return in about a year in 100 trades. So if that's not evidence enough that you need to stay out of the way, no matter how smart you think you are, I'm not sure what else we can really do right now.
What you just said is the whole point. The whole point is experiment, and that's exactly what I wanted to show, is that we have no control over returns. We have no control over our trades. We all lie to ourselves in the beginning and say, well, I know it's going to bounce here, and I know it's going to go here. No, you don't. Remember our famous saying, you don't know shit. What you do know is you're going to make a bunch of trades. Some are going to work, some aren't. Some are going to be decent winners, some are going to be decent losers, some are going to be great, some are going to be awful. You have no idea which one those are. So you're going to treat them all the same. When you do that, here's the greatest thing about trading. You start with an edge. I'm pretty sure that when every single one of us got started in trading, we just focused on the entry. We just had to figure out the entry. Here's the problem, is that we're starting off in the hole. We have to try to make an edge that's so great for us that it can overcome our psychological problems that we're going to mistake. If you start out with good position management that has a proven edge, you have plenty of time to develop entry systems. You might not be as profitable as you want, but you'll be a little bit profitable. That gives you a lot of time to build these systems and test out entry strategies. But like the rest of us, we all jumped into the entry. And it took us years to finally get good enough at entry and then get it good enough at psychology. Just start with good position management. And then that gives you a lot of time to figure out the rest. And the last thing I want to just add, remember this, write this down, put a sticker on your computer, whatever you need to do. Deviation is the enemy of trading. Write that down. Tattoo that on your forehead. Well, actually, don't do that. Tattoo it somewhere else. Deviation is the enemy of trading.
Yeah, it's funny how it seems so simple when you say it. And you're like, oh, well, that's all I have to do, no problem. Yet we have dedicated probably over 70 of our 72 or 3 episodes that we've done so far to this very concept. And I guarantee you the majority of you are still doing it. And if you're still journaling the right way, like we tell you to on here, you can see just how often that is. So we will continue to move forward and try to get that number down. But just so you know, yes, we're not talking out of our ass over here. We're actually experienced. We've made all these mistakes before. And when you come out the other side and you do this the correct way, still doing it. And if you're still journaling the right way, like we tell you to on here, you can see just how often. And now you have some proof right in front of you. So first of all, Rob, congratulations on 100 episodes. Congratulations on your results and proving a very important point that I hope a lot of people see over time. I wish you and I both had a bigger audience so the world could see this, but I'll do my best to let everybody know about it. Is there anything else you want to say before we sign off here?
I do want to thank your listeners who have supported me through this entire episode or this entire experiment. It was a lot of work. I am not sad that it's over. I'm very, very happy it's over. I have no intention of ever doing this again, but I'm very glad that we now have created the record. Just like I wanted to know about those 2 traders years ago that threw those darts, what were the numbers? How did it work? What did they do? I don't know the answer to that. From this point on, everyone can see the record is there. I'm so happy I did it, and I'm so happy it's over. And I thank every single one of you for supporting us, for your comments, for your funny comments. We've enjoyed it, getting to know a lot of you. But it's time to move on to a new project. So thank you so much, everybody.
And it's time to move on here. For Rob Reinhold and myself, thank you for joining us here at the Trading Psychology Podcast. We will both see you next week.
Goodbye, everybody.
And suck it, haters. This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, it is the explosive Rob Reinhold.
Wow, explosive. I hope you don't mean explosive diarrhea, Rob Reinhold, but it's been known to happen. Hey, everyone, it's great to be here, and hopefully everyone had a great summer.
Yeah, heading into Q4 here, we need to talk about a few things here, Rob. We really did probably my favorite episode we've ever done last time, talking about the Flat Earth Trading Society's 100th episode and what we learned from it, because it is proof positive that everything we talk about here works. If you need proof, there it is. Go look anytime you want. Now that we know this, what happens when we as traders do not achieve the results that we saw back in the last episode? Well, a lot of things happen, and we've talked about a lot of those things on the show, but do we take credit for these things? Do we take credit when we do really well? You know, there's a lot of things that go into accountability. And Rob, I wanted to define terms here real quick, and I kind of just did on my end. I define accountability as owning your results, good or bad, whatever they are. Pretty simply put. Do you have anything different than that?
My definition of accountability is meeting expectations, either your own expectations or other people's expectations. That to me is accountability.
Okay, so what if people have unrealistic expectations? How do you deal with that?
Well, those are very hard to meet. If you make really ridiculous expectations for yourself, you're pretty much always going to fall short. But there's this fine line. We all know that, like, you set goals higher than you think you can accomplish, just so you can reach a little bit further than you might have actually reached. So look, as long as you don't beat yourself up, you don't quit, you don't fall apart because you didn't meet these expectations, as long as there's growth, I think it can still be a very positive thing.
So moving forward, now Rob and I are shooting this a bit later than usual, so we didn't really have time to go over the outline. And Rob, you added this part late, so we never really got a chance to talk about it. It's the 4 tendencies quiz. Now this is something you would do. You like stuff like this, and I think the viewers like it too. So I'm not since we didn't get a chance to talk about it, I'm just going to let you kind of riff on it. And if you need me to answer questions or jump in, I will. But tell us what this is all about.
You bet, Patrick. And you didn't even get a chance to take the quiz. And now I am so curious of what your score is going to be. But let's get into what the quiz is. My wife is a big fan of, she listens to a podcast. I don't even know the name of the podcast. It's a lady, her name is Gretchen Rubin. And I've listened to it enough times. It's very specifically built for women, so it doesn't quite grab me as much as it does her. But she had this quiz, and she made this quiz up, and it really talks about how we all react to accountability. And it's called the 4 Tendencies Quiz. If you go on and type in Gretchen Rubin 4 Tendencies Quiz, it'll probably pop up automatically in your Google search bar. Patrick, I'm going to send you the link that people can go in and take it. And basically, it will ask you questions and give you a score, basically saying how you react to expectations and how you react to accountability. Now, there's going to be 4 results. So let's kind of go through the results. So upholders, they are going to meet their own expectations, and they're going to be able to meet other people's expectations. So these are people that are always on time for themselves because they want to be on time. And if you ask them to be there at 6, they're going to make sure they're there at 6. So they meet their own expectations and they meet outside expectations equally. Equally is important. The next group you could possibly be is called an obliger. Now, my wife is an obliger, and she's awesome. She is what she calls a people pleaser. So if she says to herself, I want to go to the gym at 4 p.m., she has a hard time meeting those inner expectations, her inner accountability. She has a hard time meeting those sometimes. However, if you say, hey, let's meet at the gym at 4 p.m. to work out together, she will be there early, every single time, 100 times out of 100. So for her, she needs accountability because she has sometimes a difficult time meeting for herself. So she does lots of exercise classes. She does lots of things that other people's expectations of her, if she doesn't meet them, she doesn't like that at all. So that really helps her meet some of the goals that she set for herself. Now myself, I am a questioner. Questioners, they don't care about other people's expectations. They care about their own. So for me, I will decide what I'm going to do. If you expect me to be there at 4, I'm going to look at my calendar and say, you know what? I don't think I can be there till 4:15. And if you say, look, I really need you to be there by 4, I might change my schedule up, but for the most part, I'll be there 4:15.
I can vouch for this.
Okay. So I'm a questioner. I will make up my mind of what's going to happen, and your expectations of me I shouldn't say do not matter, but mine take priority. And then the last of the 4 Tendencies quiz, which is the most difficult, is what's labeled as the rebel. Now, the rebel's catchphrase is, you can't make me do it, and neither can I. I have a son who is the rebel personality, and it was a difficult personality when he was growing up. So we had to kind of trick him into him thinking that he came up with the idea for him to actually be able to meet those expectations. But he couldn't be there at 4 o'clock, and if we said be there at 4 o'clock, he couldn't be there at 4 o'clock either. So look, this is a fun little quiz. Look, it's not super scientific, but go and take it, because how you score on this, there is, a really good nugget of truth in this quiz that will really help you learn a little bit about yourself, of how you should handle this accountability in trading.
All right, well, you have known me for about 10 years now. If you had to put me in one of those 4 categories, which one do you think I would be?
I think, based on what I know about you, I would put you in the questioner category. I think you will do your research and decide what you want to do. What was that right?
So which one is that? Is that more like you, or is that more like your wife?
No, more like me, like a questioner.
Okay, actually, I think I'd be more like your wife, and I'll tell you why. And so I'm thinking back to when I was employed, I was always on time, and I was always prepared. I don't know why that is. It's just a work ethic thing I had in me from the get-go. And it actually kind of helped me because I was, I was always not really a prick to management, but I would always question something if I thought it was dumb or inefficient. But because I was always on time and I knew the menu inside and out, and I was always really good with the guests, I could kind of afford to do that. So maybe that was the reason I was always as punctual as I was, because it gave me more leeway in other places. But I've always been that way. And I've always been that way with the channel. Back in the day, I was putting out something every Monday and every Thursday. Now it's 3 times a week, and I also pay attention to when I put it out. And other people are like, "Why do you care so much about when you release this?" I'm like, "Look, if I don't care about what time this goes out, then who's going to?" I always want to try to get it when all time zones are at least around. Maybe not in Asia, because they're in Asia and it's tough, but. I want to make sure everybody in Europe and Africa get it in the morning. I want to make sure people in the United States get it in the afternoon. That was always my thing back when I was starting the channel. And and there was nobody to hold me accountable for that. So I was really good with that. Then again, I never go to the gym at the same time every other day when I go to the gym. I want to, but it just never turns out that way. And there's all these other tasks I have to do too. I get them all done. But as far as when, it never quite happens when I want them to. So do you think that puts me in the obligers category? Because that's where I think I was going with it.
Let me ask you this one simple question. You said that you showed up to work all the time. And I already know the answer to this, but I want to ask this. Was it because you wanted management to know that you were punctual and on time? Or was it because you knew that if you were late, that you made your friends and your other servers, you made their lives worse?
That's a really good question. I think it was probably the latter, because I know how it can, because it's the restaurant industry, Rob. There's so many people that just come in late all the time, but they're cool with management or some kind of nepotism hire, and they never get in trouble for it. And it did mess us up a lot. So it was kind of a letting the team down thing. So it's not like I was really trying to score brownie points with management. I kind of just felt like it's just what grown-up, responsible people do, and there's consequences if you don't.
Yeah, so that will definitely put you in the obliger category. So if you cared more about how it affected others than really how it affected yourself, it's definitely going to put you on the obliger side. But look, we're all a blend of all of these things. We all have a little bit of rebel in us. We all have a little bit of holder, but we will show one a little bit stronger than the other. No question about it.
Interesting. Okay, so we will link that down below. Now that we have that part out of the way, let's talk about how this actually applies to trading. And the first part I want to talk about is owning losses. So when you take a loss, what is the first thing? I'm not saying to you, Rob, I'm just saying rhetorically. What is the first thing that goes through your head? Do you blame it on the system you put together? Do you blame it on what's going on in the market? Do you blame it on external events in the financial news? Or do you just say, "Hey, look, it was my fault. I put this together, and it's my results, sink or swim"? That's kind of how I define owning losses. Rob, do you have anything to add on to that, or can you kind of see yourself in some of these explanations, like maybe an older version of you compared to a version of you now?
Well, I think the question of owning losses is we really have to talk about, really what the Four Tendencies quiz did was talk about inner expectations and outer expectations. So we're really talking about inner expectations at this point. We all have these goals. We all have these measures, these metrics that we want to reach. And these are set by us. Now, we talked earlier about when you set unrealistic expectations, it is setting yourself up for some failure. But these are all internal expectations. And so I think that every single loss should absolutely be owned 100%. Because if you don't own it, it's very difficult to learn anything from it. Because then you get into the victim mentality to say, "Oh man, bad luck. That damn Chairman Powell again, or the Bank of Japan did this. Can you believe this is happening?" By doing that, you're not learning anything from it. because it happened to you. You didn't make it happen. It happened to you. So I'm huge on owning losses. Every single loss you take is your fault. Now, again, there's things that happen, but it's your fault, and if you should try to learn something from it. So I can't stress that more. I really hate whenever I talk to one of our traders and they give me an excuse how the market did this, and I'm like, no, this is on you. So yeah, owning losses is so important as a trader.
And if I was a young prop trader in your firm and you came to me and said that to me, I would initially be pretty upset because I'd be like, no, I know what happened. It was actually the market that took me out of that trade. But you're so right, though, because this is what every really great head coach does. This is what every great quarterback does, regardless of whose fault it actually was. And everybody in the whole world knows. They know that they're not even being genuine when they say this, but they still do it. They say, look, it all comes down to me at the end of the day. Sink or swim, if we lose, it's on me. Now, when they win, oddly enough, they say they thank their teammates, they thank God, they thank their wives, whatever. But when it comes down to the actual losses side, it's funny how this works. The great ones always put the blame on themselves, don't they?
Yeah, and you're right. And then when you look at when they do win, they look outward. They look outward and they say like, oh no, it was the team, it was all these other things. Now, in the world of trading, you should say things like, you know what, my system performed well in this market condition. I'm really happy with it. I want to thank my system. It's like, winning the Super Bowl and giving the microphone and be like, I really want to thank my system for winning this football game. And if without my system, there's no way we could have done it. That's how you should feel.
Yeah, and it'd be a really corny thing to say, I'd like to thank my system. But what you're really thanking in that situation is just your preparation, your training, your nutrition, all the things that go into where you are right now. And I actually think it's okay to do that in the world of trading. Say, look, you can give thanks to your system, but your system is you. You put the system together, regardless of whether you learn how to do it from me or somebody else, whatever the case is. I get a lot of praise when the systems work really well. They come back and they thank me for it. I'm like, look, you put this together. I don't even know what your system looks like. This thing is all yours, and you should celebrate those wins.
I completely agree. Trading is a really hard business. And if you don't pat yourself on the back and you're just constantly, getting down on yourself for the losses, oh my gosh, this is going to be an absolutely horrible profession for you. And if you can't get out of that, please quit and go do something else, because it is not worth living life like that. Own your wins. The only advice I can give here is that if it causes negative consequences to your trading, then maybe you shouldn't own them so much. Like if you start to get really, full of yourself and you start to deviate from your system and start to trade bigger and start to do things because you are so smart, then obviously we got to tone that down. But look, trading is a tough business. You've got to enjoy and revel in the gains. It's one of the reasons I do advocate, and I know, Patrick, this is something you don't really love to do because you don't want to slow down compound growth, and I get the math behind it. But I love to reach out and push traders to take distributions. I say, please you had a great month, take this distribution, take a little bit of it, go on a trip, put the rest in the bank, or put the rest in, money market funds or whatever, so it's earning something. But celebrate this, because we all know in trading there's ups and downs, and you've got to manage them both really well, or else this is just a long fight that doesn't seem to really have any payoff. So I really do love for having people take capital out.
And I think that's actually a really good idea from where you sit, especially if it's somebody who's pretty early in their prop firm career, because you're giving them a taste. You're like, hey, take this money, put it in your account, see what it feels like. Whether you're just sitting there looking at it or whether you're actually spending it. You should know that, like, hey, with hard work and running a system the right way, this is what can be possible. I think that's a great motivating factor. But like you were saying before, too, and we've talked about this a lot of times on the show, you can own your wins, but not to the point to where you think you're just completely invincible, because the market will press you down right away if you do something like that. But it's okay to say, yeah, you know what? The reason I am year in and year out a profitable trader is because of the system I put together and my adherence to the system. There is nothing wrong with that. That falls into accountability as well, not just the losses. So to kind of tie everything up, or at least tie those last 2 points up, owning your overall results, I think, is incredibly important. And you think this would be obvious, but from where I stand as a YouTuber, I see people fail on this a lot. It always happens, Rob, when the market's slow, and we're all trend traders at No Nonsense Forex, and so we're taking losses, we're stagnating. All the excitement we saw when we back-tested indicators and back-tested systems, and all the excitement we got when we got those first big wins, they're just not there anymore, and now we're taking losses, and those gains are dwindling back down to break even, maybe even below, and now I am losing faith in the person who told me to put this system together. And here comes all the hate comments on my channel. It never fails. It never happens when the market's trending and everybody's happy. It happens when the market's going the other way. And I'm not going to sit there and be confrontational with these people because that argument's not going to go anywhere. But what I want to tell everybody is look, if you don't own your results, it's not like I run a signal service and I told you what trades to take and how long to hold them. I'm just an educational guy who told you how to put a system together. You took it from there. And now that it's not going your way, you want to push it back on me. Look, man, you're not going to go very far in anything if this is going to be your approach. Have you ever run into anything like this, Rob, within the prop firm? I'm not sure exactly how it would go down. But do you get some of this sometimes, some of this vitriol towards you?
No, we don't really get that because, we expect traders to run their own book. We expect traders to develop their entirely own system, run their own book. So we don't get that a lot. But, I think it's a great thing to talk about in this podcast of accountability. Because what that means is that you are not meeting your definition of success, or you are not meeting your expectations. And this is where it does you no good whatsoever to blame the outside world, because when you do that, there's no improvement. And so in this episode of accountability, let's talk about, our inner expectations and how to manage them. Now, I gave you 4 types of people, and I want to go through these because I want to talk to now you individually. Some of you are upholders. And remember, upholders are the ones that they will actually have a list of all the ways that they did not meet their accountability for you. If they reach out to you and say, hey, I need you to help me to be accountable in my trading, when you finally meet with them, they're going to have a list already of all the ways that they didn't meet their accountability, and they have already fixed them. So look, upholders really don't need a lot of accountability. They are really, for just by themselves, really good at this. All right, so I've got this on our worksheet here. So upholders love accountability. So let's move next to the obligers. Obligers want accountability. They want accountability. The traders we get that are obligers, they want to meet with their coaches weekly. They want feedback on how they're doing. They want people to look at what they're doing and tell them what they're doing wrong so they can get better. Obligers desperately crave accountability. So if they aren't meeting their own internal expectations, they're saying, hey, I need you to help me meet my expectations. What can I do, or how can I change these things? So if you are an obliger personality, then I think it's very, very helpful for you to get, and we're going to talk about this next, an accountability partner. Someone who can really help you out in the world of trading. We'll talk about that here in a little bit. If you are a questioner like me, now I said that obligers want accountability. Questioners need accountability. Here's the problem. We don't value your opinion at all. We don't care what you think. So as you can see, if I'm not meeting my own personal expectations, like maybe it's something like I can't follow my system all the time, or I keep doing something that I know I shouldn't. it's very, very difficult for a person like me to go outward and say, I need help with this. It is very, very difficult for me to reach out and ask for help on something because I don't really value other people's expectations. I just value my own. So, Patrick, do you have any advice, or have you known anyone like this in your life that you know they need that accountability, but they're maybe just too proud to accept it?
Yeah, I've known many alcoholics in my day, Rob. Yes, exactly.
Hey, don't talk about me.
The shoe fits, right? You put it on yourself. I'm telling you, they know what the problem is, but they just don't want help. And maybe a small part of them does. I don't know. I've never known anybody with an addictive personality that said, hey, I really want to quit this addiction. It usually takes rock bottom until that happens. So that was the first thing I thought about when you said that. Now, that's probably not the greatest example in the world, but it's funny, too, because you were talking, you kind of gave secondary definitions to these four categories. And honestly, I'm probably a little bit of a hybrid between you and your wife, too, because if it's something I'm really good at, or I feel like it's something I'm really good at, I don't value anybody's opinion. I'm like, yeah, I'm the shit. I don't care what you have to say about it. Maybe you're good too, but you're not doing it the same way I'm doing it. So it's kind of irrelevant, right? So it's interesting you put it that way because there's two groups of people, I think, as far as my subscribers go. There's the people who just want help all the time, and I'm not very bullish on their future, to be honest. And then there's the ones who I almost never, ever hear from because they pretty much feel like they got it. And I'm kind of left wondering how they're actually doing because they don't really ask any questions or they don't really even chime in. They just kind of, you wind them up and they go.
Yeah, and everyone is going to be a mixture of all of these things. And the last one we need to talk about, the most difficult one of these tendencies is the rebels. Rebels need accountability and they will hate it. They will absolutely hate it. So look, again, all of these things are if you can't meet your inner expectations. And look, those inner expectations, and we've talked about this, Patrick, time and time again on this podcast, and just in case this is someone's first episode, let's repeat this. You have absolutely no control over returns. Zero zip. Judging your performance as a trader on your P&L is the surest way to really struggle in this business. So you should already get rid of that. If you haven't got rid of that, get rid of that. And so your expectations should be things like, my expectation is to be perfect this month in my entries. Okay, that is your expectation. That's something that you have control over. What happens when you can't meet these expectations? And that's what we're talking about here when accountability. Because when we can meet our own expectations, everything's great. Upholders do this all the time. But when we can't do the things and meet the expectations that we have of ourselves, this is where, and again, this makes me cringe just saying this, but you have to reach out for help. I am terrible at this. I am not the person to be, again, if you looked at my life, my wife would be laughing at me right now just hearing me say this. But you need an accountability partner, period.
Yeah, and that's going to kind of coincide with the solutions part of this episode, which we're about to get to. But you just said one thing I want to touch on before we do that, Rob. And we've danced around this topic in previous episodes, but I don't think we've ever really gone into it. We don't need to go into it a whole lot. But remember this too, what Rob just said. Your ability as a trader has almost nothing to do with your actual P&L and your trading results. We've talked about this before. You just want to become a better trader. And I don't want to give away something I'm going to bring up at the end of the show, but just remember that. You see these interviews with people on YouTube, like this Forex trader got a 167% return last year. And everybody's like, oh, wow. And, these videos get all these views, and everybody's all enamored with this guy. The chances of you seeing that guy again next year or any year thereafter is almost zero. They caught lightning in a bottle. They're not this great trader. A really great trader wouldn't even get that kind of P&L. And Rob, you know what I'm talking about. So, just understand, your results and your ability as a trader are not mutually exclusive. They very seldom are. So moving on from there. So Rob, you got 4, I got 1. So go ahead and rattle off the 4 people or organizations that exist that could help a trader out as far as keeping them accountable from this point on.
All right, let's jump into it again. Keeping yourself accountable to your own expectations that you can't seem to meet. So the first one I've got is a trading friend. Now, this word friend, I know it can mean a whole bunch of different things. There's some of my friends I see every 10 years, and there's some of my friends I see daily. It really is literally just someone you know. Or it can even be someone who you know online. I think the world's just such a cool place now. I remember when my son was about 8 or 9 years old, in 8th or 9th grade, he didn't have a lot of friends at school. He would just come home from school and go down in the basement, and my wife and I were worried about him. And she's like, hey, we'll go down there and talk to him, will you? Like, about having friends. And I went down there, and he was laughing. He was having a great time, and he had his headset on. He was playing Xbox. And I asked him, oh, who you playing with? He's like, oh, my friend Marcus from Sweden, and my friend here from this. And I realized, oh, he has friends. He has friends. They're just not the friends like when I was a kid. He had friends with me. And I went upstairs and I said, he's fine. He's got plenty of friends. So look, there's a lot of people you can meet online. If you're looking for this, please go to just any forum. Go to any forum on a Forex Factory, go to Elite Trader, go to any forum and just be like, hey, I need someone to help me be accountable. Who here is willing to do that? I promise you, you're going to have people reach out to you and offer to do that. And you need to tell them, this is what I need you to keep me accountable for. Now, the great thing is if you meet them on a trading forum, or you know someone in your life that's a trader, they know the game of trading. And so it's going to be very easy for you to kind of train them of how to keep you accountable. Another person you could hire is a trading coach. There are trading coaches out there available. So do some Google searches, or does anybody here online know a good trading coach? You're going to get a name, hire that person, tell them, this is what I need from you. This is what I need from you to help me stay accountable.
And just so everybody knows, I am your friend. For a lot of you, I am your coach. But do not choose me for any of these 2 things. Like I said before, I have enough on my plate. No offense.
And I'll go ahead and just same that. So thank you for getting that out there. Okay, so people that are in the trading world are going to be very good for you to link up with and to help you be accountable. And look, and just be honest, I'm having a hard time keeping my rules, and this is what I need help with. All right, let's talk about one that I think might be the most effective, but also might be the most embarrassing, difficult, is a spouse or a significant other that you're very close to. All right, now I know I've said this so many times in my life. There is only one person in this entire world that can hurt me, and that's my wife. Anyone could say anything to me, and it doesn't matter. She's the only one that can hurt me. Her opinion of me is more important than my opinion of me. So, if you are feeling comfortable with this, again, like I said, this is going to be the most uncomfortable, but probably the best one. And I actually had one of my traders that got his wife, and they sit down, and she goes over his trades. And she's like, why did you do this one? You know better, because he kind of trained her of what he was doing and the problems he was having. And boy, I'm telling you, it fixed it within a week or 2. Patrick, I'd never seen anything fixed that he had been struggling with for years. It was fixed because he, like me, was absolutely embarrassed that he made the same mistake that his wife told him, I can't believe you made this. It was beautiful. Now look, this is extreme. What are your opinions on this one?
Well, at first I was like, oh man, I really hate this one, because like it's not like your spouse is going to have any idea, how to trade or how it's affecting you or anything like that. But the example you gave, did make more sense towards the end. That's all I can really say about it.
Yes, anyone who's not in the world of trading, you're going to have to train. And you're going to have to be like, stuff like this. He was struggling with overtrading. And so it was like, hey, I want you to, if you ever see me make more than 2 trades in a day, then that's a mistake. I think anyone can figure that out. You're going to have to train them for sure. All right, let's talk about this last one, a prop firm. Now look, this is not a plug for Maverick Trading. Well, maybe it is a plug for Maverick Trading, but look, there's lots of prop firms out here. One of the things I always say that's good about a prop firm, there's good and bad about prop firms, do your research, but one of the good things is forced discipline. And I tell people, you want forced discipline when you're being an idiot, when you're breaking rules, when you are going into too big of a drawdown and you get, I call it stuck in a trade, like a deer caught in headlights, where you literally know you should get out, but you can't get out. Patrick, do you remember those in your early days in trading when you absolutely 100% knew you should get out, but literally couldn't?
Yeah, and it was during my early prop trading days because I put huge pressure on myself to perform, and so I would do things that were completely outside of my system to get that done. And when you do that, like you just said, yeah, you get stuck in a situation to where you should bail, but you have to take the chance that the trade is going to start coming your way again, because if you don't, you feel like that's going to be it.
Yeah, and every prop firm is different, and some of them are very, very restrictive. Like they will just cut you off. Like if you have a 2% drawdown, you're out. Like you blink and you're out. It's done. Sometimes that's really good, and I would say that if you're having a hard time with accountability and you don't have like a trading friend or the ability to hire a trading coach, maybe these prop challenges are exactly what you need, to where you look for one that's very restrictive, no, I shouldn't say very restrictive, but is the right setup for the issue you're having. So maybe let's say if you're having overtrading issues, they have a rule that you can only do 3-day trades in a week. That is the pattern day trading rule. So maybe that is what actually controls you, to where you don't have a choice. If you make more than 3-day trades in a week, your account is put on hold for a week. That is what I'm talking about when it comes to forced discipline. So find a prop firm that has the right kind of parameters in place for you if you're having a hard time being disciplined yourself. So those are the 4 I wanted to talk about. Patrick, I see you have one other that is just the best.
I do, and I want to say one thing real quick about Maverick Trading, because ever since I joined Maverick Trading, I never felt the need to join another prop firm, but I was in other prop firms before that, and so I can't tell you what the landscape is right now outside of Maverick, but I can say what it was before. Most prop firms don't care about you at all and don't want to nurture you in any way. And if you don't succeed, that's fine. They got what they wanted out of you. So just take that into account when you're looking for prop firms yourself. I know Maverick's on the pricier side, and so that doesn't apply to everybody. So you'd be looking for other prop firms to go to. Just pay attention to that one thing, because I'm telling you, it's a different arena. You're going to want somebody who's actually there for you, especially early, and a lot of them just aren't.
Well, Patrick, we are what I call old school prop, the new prop firm model. And Top Step Trading was the first one to bring this out. And when I saw it, I said, wow, that's actually a really good idea, to where you get a whole bunch of people, you bring them in for a very low price, you give them all demo accounts, they're all paying you monthly, and they have these little challenges to pass. And if they pass 2 or 3 challenges that might take them 2 or 3 months, then you give them a little bit of money. And I'm looking at this whole business model as a huge funnel where I put in 1,000 potential traders, and at the end of it, I get 10 amazing traders. Now, yes, the rest of them didn't make it, and I collected some money from them during the whole time. But in the end, I get really amazing traders that now I can really start to fund with some big amounts. That is the new model of prop trading. We are what I call the old school model, where we're like, no, we're going to back you with capital, and we're going to give you the ability to make it. We don't have these tight restrictions Our restrictions are, follow your plan. We trust you. You've proven your worth to us. We're going to give you some money, a little bit at first, see how you do with it, and then we'll increase it going forward. So if you are someone who really says, I need the really strict rules for my trading to be successful, yeah, we're not the right place for you. You should go with one of the new school prop firms with the challenges. But forced discipline is a real thing that people need. And again, be honest with yourself. If you feel like this is something you need, go find something that will help you out. One of the things I mentioned is the pattern day trading thing. If you have a hard time with overtrading, just make sure your account is never above $25,000 if you just have your own personal brokerage account. By simply doing that, you are going to limit your overtrading, because if you go over 3 day trades, your account gets locked down for a week. And if you do it too much, they just kick you out of the broker dealer. So forced discipline is a really good thing. Just make sure it fits you right.
And just know, if you don't have any friends or coaches or a spouse or a prop firm in your life to do any of these things for you, do not despair, because all of you should at least have a trading journal. And that's my solution. And remember, when we talked about the journal, we talked about all the columns that you would put into that journal. If you don't know, you just go to my blog, type in journal. You can read the blog post on it. It has everything you need right there. But we said, what is the most important column? And I don't think anybody guessed it on the first try. The most important section in your journal is the comments section, because that's where you say only if a loss occurred, if it was something that you did because you deviated from your system. That's all you put in the comments section. And over time, you look back in that comment section and you see if the number of comments you have entered has stayed the same, has gone down, or God forbid has gone up, then you know what you have to fix. And this is how you maintain accountability towards yourself. Now, this doesn't work if you're not an accountable person in general. If you're blaming those losses on the market or an external factor or on something that happened in your home, if you already have inherent accountability when it comes to your trading losses, then a journal is perfect for you, because like we said before, it's not about your P&L. It's not about your bottom line. It's about how many of those comment section headings can you eliminate over time. And we just showed you on the very last episode with the Flat Earth Trading Society results that if you simply do that, there's going to be very, very little in your way going forward.
And I just love this last one, and I agree with you so much. One of the great things about keeping a journal is that when you do get an accountability partner, you can give me your journal right now. And if you've kept good notes, within 5 minutes, I can say, hey, these are all the things you need to do, and these are the things you're going to do to fix it. It really helps to have that journal, just in case you can't figure it out yourself, to be able to hand it to an accountability partner and have them go through it. So journaling, for me, was one of the hardest things to make myself do. I hated it. I absolutely hated it. It's my least favorite part of trading, but it is so important in the beginning. So please, 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 if you've forgotten to journal, if you don't like journaling, just do it. Just do it. It's not that big of a deal. Just do it. All right, I'll stop ranting now.
Yeah, and I said before in the journaling episode, women have no problem with this. Women love it. That was one of the favorite episodes of all time with my female subscribers. But guys, we absolutely hate it. You're right, like most of us do. But if I'm meeting you for the first time, and you're a no-nonsense Forex trader, for example, there's no way I can tell if you're an accountable person or not unless you have that journal. You can sit there and say anything you want. I don't know that unless you have something to show me. So think about that going forward. I wonder what percentage of our listeners, Rob, actually keep a journal at this stage. I will bet under 50%. So let this just be a message to all of you. Let us stress the importance of accountability in all aspects of trading. And Rob, do you have anything else before we sign off?
I don't.
Well then, this has been the Trading Psychology Podcast. Rob and I will both See you next episode.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, they call him Mr. Action. It's Rob Reinhold.
Ooh, I like that, Mr. Action. And yes, I would love to be Mr. Action all the time as an extrovert. This episode is going to be right up my alley here.
Yeah, and this is going to be, I guess, the anti-episode to something we did, I don't know, a few months ago, I think. It was the episode we did on boredom. So, like anything, nothing is definitive. There's always little nuances here and there. So we are going to tackle the aggressive side of the equation. And, we've done this too before, Rob, but I think when we come up with these new ideas, they're just really expansions on some of the older ideas. But we've gotten a lot of really good feedback on the boredom episode, which I was a bit surprised, and the extrovert episode. So I think it's time we expand on this a bit.
Getting really exciting feedback on an episode about boredom is very surprising.
Yeah, I think certain episodes just hit people a certain way. Maybe they didn't know how to articulate it before. Maybe they don't even realize that they had these issues and they just needed somebody to actually say it. On this podcast, Rob, not a whole lot of people talk about trading psychology out there. And if they do, it's in one video and they try to encompass everything into a 45-minute video, and it just doesn't do the job. I really think it helps to break these issues down into situations like we do here.
There's no question, because when you break them down into smaller pieces, they become more relevant. And people say, oh my gosh, that's how I was feeling. But when you just cover the big broad topics, everyone says, yeah, I know I understand it, but maybe that's not an issue for me. But when we get down into these granular things and we literally say, oh, I did this once, so many people are like, oh my gosh, that's what I was doing the whole time and I never really saw it. So I'm really glad that we are just going into greater detail to get to every single possible situation that can happen.
Yeah, I would agree. And for action bias, the way we're going to open the show here is by, we always try to define terms. And so, Rob, this is an outline you put together. So I'm going to have you go ahead and define terms here. Then we'll throw out a few examples of action bias that you might experience other people doing in real life, and then we'll kind of switch it back over to how it's relevant to trading. So, Rob, go ahead and start us off here. If you say the word action bias, not everybody really knows what you're referring to. What exactly are you referring to here?
That's a great place to start. So there's a lot of study out there on action bias. If you type it into Google or wherever you go for search engine, type in action bias, you'll see that this phenomenon has been studied by social scientists, and they've really dived into why this is a thing. And basically, when we talk about action bias, it's when you have a situation that the decision is not clear of what to do. A lot of us tend to act first instead of sit back and really think about it. And let's talk about why we do that as human beings. Because we're really thinking about the after effects. When I was raising my kids, I'm going to spend a lot of time on this episode talking about raising my kids, because I really want to show the programming that goes into all of us. But, I always told my kids, look, you're never choosing what you're choosing at the moment. You're always choosing the consequence down the road. So I'd say something like, and again, the kids were like 5, 6 years old. I said, hey, if there's like 10 donuts on the table and you decide to eat all of them, you're not really deciding to eat those donuts. What you're deciding is you're going to feel sick, 12 hours later. And if you keep doing it, you're going to get overweight and your bones and muscles are going to hurt and all that stuff. So I really wanted to teach my kids, you're choosing the consequence. Now, we all understand that. We all understand that as human beings, for the most part. And so when we get into the action bias, we start to think about the consequences of not acting. I'm going to use an analogy I read online. Look, I actually fact-checked this right before the episode, and it is not factually true. So, again, I'm fully understanding this, but I want to give this example to really give you an idea of action bias. let's talk about taking a penalty kick in soccer. All right, let's say you are the goalie. You are the goalie. And let's say that you know that this one kicker typically kicks it down the center. So you decide that you're not going to move at all. Now, as you're sitting on that line, I want you to picture yourself, you're the goalie, you're on the line, and you know, okay, this kicker, I think the best odds are I stay right here in the center and I don't move at all. There's 50,000 people in the stands. Your family's there. You're going to go out for some drinks and fun afterwards. If you are the hero, if you can stop this goal, the guy starts to come towards the ball, starts to kick it. What are you thinking? I know what I would be thinking. I would be thinking, if this guy kicks it to the left or right and I don't move at all, I'm going to be humiliated. So all of a sudden my brain's going to do this thing that says, hey, I want to avoid this humiliation. I need to choose left or right to jump. And so just for that reason, I take action. Because look, we've all seen penalty kicks. They're very difficult to stop. If you dive left and the player shoots it to the right, there's really no shame in that. But if you just sat there and did nothing, the shame would just be overwhelming. So because of that feeling, you would want to dive left or right. Now here is the actual numbers of this. So there is no statistical benefit for a goalie to stand still, but there is a statistical edge if you are the penalty kicker to just kick it right down the middle. For this exact reason, because the goalie is most likely going to dive left or right because they don't want to just sit there. But only 14% of kicks are down the center, and most of those end up going in. But think about the kicker. Think about if you were the kicker, you've got 50,000 people screaming, the game is on the line. If you just kick it right down the center and the goalie doesn't move and just catches it, you will be a laughingstock. So you decide, you know what, I know my statistics are best shooting it down the middle, but I've got to at least aim left or right. This is action bias in a nutshell. And you can see on both sides of this situation, we have two people in opposite situations and they both feel the need to take action because they know that the embarrassment or the pain of not taking action is greater. Patrick, what do you think about that?
If I was the goalie, I would just show the shooter my ass and my balls and hope he just was laughing too hard to shoot an accurate shot. But yeah, I know what you're saying, though. It's so this goes into a couple different categories that we're talking about today. Mine are going to be different, but I'll tell you how. Like in your situation, yours was more, what is this going to do to my reputation? How is this going to make me look in front of other people? Now, when you're trading, this can or cannot be a factor. If you're just trading for yourself and nobody's looking, well, then it doesn't matter. But maybe you're trading for a prop firm and you're worried about what they're going to think if you just sit there and do nothing for a month. Or maybe you have a signal service and people are paying you to give them trades. And you take some days off because there's no trades to be had. But they're like, what the hell? Why aren't you giving me any trades? So there's pressure there, really, no matter what you're doing. So I think that's a really great example. One of the actions I want to give is a Vegas example because that's what I knew for so long. And I've brought this up before, but this is just somebody who always feels like they need to be doing something. And I don't know if we covered this in the extrovert episode or not, but in Vegas we call them action junkies. So if you're sitting at a Texas Hold'em table and you have that guy there that just wants to play every single hand, because if not, then maybe they don't feel stimulated, maybe they don't feel like their time is justified. And then in the sports book, you have those people to where okay, let's say Monday Night Football, great example. People ask me, hey, you got to play for Monday Night Football. What are you doing? I'm like, I have no advantage there. I'm not playing the game. And they're like, what? Why? It's Monday Night Football, bro. It's the only game on. Why do you not have a bet? And they can't process this. They can't understand this. So, There's just people who are just hardwired to always need to be taking action of some type. But is this the best move in the trading world? We're going to get further into that. But those are probably my best examples, I guess, from personal experience, Rob. Do you have any more examples before we move on to the kind of the why and the solution portions?
Yes, I actually have one more example that I think is it blew me away when I did this in my life. And then I have this conversation with any trader I have that's going from they had their job or their business and they're trading on the side. And they've done well enough on their trading that they want to either quit their job or work less. And they're always so excited. Rob, this has been a goal of mine for a long time. I wanted to be able to quit my job and trade full time. And I always reach out to them and say, hey, you don't want to do this. And every time they're like, what are you talking about? This has been my goal. And I said, look, let me tell you why you don't want to do this. You are used to going to a job and working and doing work. And with that work, you ended up getting a paycheck. I remember when I was shifting into becoming a trader, I really thought, oh, I've got to work. I need to work hard in order to make a lot of money as a trader. And I remember that I would be downstairs in my basement, or I'd drive all the way down to the Maverick office, and I'd come home. My wife would say, hey, did you make any trades? And I'd say, no, I didn't make any trades today. Now, I want you just to think about this. My wife, who is, a new mom, I'm leaving the house, not helping her at all, going downtown to the Maverick office and sitting there all day long and not making a trade whatsoever. And then coming home and be like, yeah, I didn't make a trade. Obviously, that kind of stuff puts some pressure on you to take action, because you think, I need to work hard, because everything else in our life, we work hard and we get the results. And a lot of times we equate that to physical work. Trading is one of the only professions where you make less the harder you work. And in one of our first episodes, we made a joke that we should get some t-shirts that say, trade harder. That's not how trading works. So when we equate this action, taking action, to becoming successful at something and making money, we're really tying our hands to not sit on them and to actually go and do things.
Yeah, and I remember you giving those analogies in the past, and it's so right. I can imagine you and I as some young hotshot traders. We just got hired on to a trading room, and we're talking shit. I'm like, bro, I'm going to outwork you. I'm going to trade so much harder than you. And that really, you're right. This is the only profession I can think of where it just doesn't work that way. Now, you do need to put in the work to test your system and to constantly improve on your system. That's where the work really comes in. So it's not like you can just be super lazy and step up and do. Well, you know what? Actually, your Flat Earth Trading kind of spoke to that. You could just be super lazy and still do fairly well, but you're never really going to be able to optimize things and get there quicker if you do it that way, of course. Work has to come from somewhere.
I just had this thought pop into my brain as you and I, young traders on the trading floor, and you being like, dude, I made 25 trades today. I'm like, oh yeah, I made 33 today. And then we're both trying to outdo each other for how many trades. That's just ridiculous. That's not how this business works.
Yeah, and then 2 years later, we're both out on the street and I'm playing harmonica and you're tap dancing for money. Yeah, I can see it now. All right, but enough fan fiction. Let's go forward here, because yeah, it's so hard to get. It's so hard for your average person to wrap their head around. I just think of all of the incorrect things I thought when I first started this business. I kept thinking, man, I'm really going to outwork everybody else. And it's funny, I kind of ended up doing that because I had to create a brand new system from scratch. But you're right, in the actual act of trading, being an action junkie works against you more than for you, because not every trade is a good one. And so what I think, the way I want to relate this to some people is I think what they will do, and maybe you can speak to this more, Rob, because you've seen it so much more than I have with your traders, but when things are slow, especially, and their system is not giving them trades, they will start to invent reasons to take trades anyway. Whether that is dropping down to a lower time frame, which I have recommended in the past, use it sparingly, cut your risk in half, but don't do it just for the sake of taking a trade because you feel like you need to, or you feel like if you don't take some kind of action, then you're not actually trading. Trading is all about the moves you make and also the moves you don't make. And there is a time and a place for each.
And it's during those times that we fall back to the programming we received as children. And I just remember, my dad always, talking about, oh, you got to take action, you got to do something. And, we hear all these quotes like, you only miss the shots that you don't take. So we have been programmed from children to take action. And looking back at my own kids, I raised them. I was very deliberate with how I raised my kids. And I will admit this, I was very deliberate with my programming. I was a different kind of dad when I was younger than most dads, is that there were certain things I wanted my kids to really get and understand. And so I was going to program them. I was deliberate on what I said, how I said it, when I said it. And one of the things that I tried to really get them to understand is to take action. And so our family has a motto called ready, fire, aim. People always say, wait, no, Rob, you got that wrong. No, I didn't. Ready, fire, aim. Take action, adjust your course after. Because the worst thing to do is sit there and do nothing. Also, we had a saying in my family, action beats inaction every single time. So I've been programming my kids to go out into the world just like we were all programmed as kids. When you get into trading, boy, it really is going to hurt you sometimes. So I just want to point that out, that you've been programmed for action, and it's not wrong. It's not wrong at all. And in fact, there's wonderful, wonderful stories in my life, in your life, in everyone's life of people that did take that chance and did take action. But we have to recognize when it's a negative in our trading.
Yeah, and would you say this is more of a societal thing depending on where you're from? Because I think you and I are two Americans talking to each other. So this makes a lot of sense. Taking action is so much better than taking inaction at the end of the day. But that's just how you and I were probably raised too, maybe even not by our parents, but just by society as a whole, where you're supposed to take chances and taking risks and chances are rewarded, even when they fail. Every time I go to Europe and talk to people, the majority of them just don't feel this way unless they've seen us do it and they want in on that lifestyle. But the overall vibe of a place like Europe, I hate to pick on Europe because, there's, like I said, there's a yin and yang to this, but is to really take a lot less chances and just spend more of your time enjoying life as opposed to chasing greatness or chasing excellence, like we tend to do in North America.
I definitely don't want to speak for Europeans in general, but let me just give you, I'm sitting here with a big grin on my face because I was very deliberate with my two children. Very deliberate. I tried to program them. Both my kids don't love to take action. So look, maybe I screwed it up, but you know what? I am convinced, and this is where, we get into all of this trading psychology. I'm convinced that nature is greater than nurture. I think who you are as a person, and that is in your DNA, is actually stronger than the programming you received as a child. So when you take a look at, all around the world or inside of some families, yes, there's absolutely going to be some cultural stuff going on, some programming. But in the end, I don't really think it matters too much because I think nature is greater. We are who we are. It's in our DNA. That's it.
Interesting. Okay, so I would even say even your most passive trader has probably experienced this at some point, and I think more it comes down to the fear of what might happen if you don't take action. And this can fall into FOMO. This can fall into it just feels weird to be inactive for this long, and it just doesn't seem right. What do you think is going through most people's head when they are experiencing these lulls and really wanting to take action, even though they know they probably shouldn't?
I think it is thinking about the consequences of inaction that is probably going to do the most damage. You mentioned one, FOMO. We have a whole episode on FOMO. Can you imagine if you didn't take action, you did exactly what you planned on doing, and then the market did something you didn't expect it to do and ran away from you? You would absolutely kick yourself. So when you're sitting there in this period of inaction, which you have determined that is the best thing for you to do, your mind is racing with all the things that may happen that's going to make your inaction look bad. And that's what's really going to get you to crack in this situation, is you're going to be playing through all of those possibilities while you sit there and be patient and wait.
Yeah, and who hasn't experienced this at some point in time? And I think we talked about this too. This might just be a greatest hits episode at the end of the day, Rob, because I'm thinking back to all the times we spoke about this, you and I. But where, let's say your system gave you the trade, and you got all green lights, but it was kind of like barely all green lights, and in your mind you're still kind of hesitant and scared, so you're like, okay, maybe I just shouldn't do it. And it turns out it was the most perfect signal of all time. And then after your first take profit, it gave you another 600 pips before your exit indicator even hinted at closing out. It was one of those like year-changing trades, and your system gave it to you. But you still sat on your hands. I know this is kind of the opposite of what we're talking about, but those memories, it's like I said, it's not the losers that stick in my head. It's the winners that I should have taken but didn't, which do. And so now, every time I see even a little something that looks good, I'm going to want to at least explore it, because now, okay, a loss is a loss, but a win could be a really, really big win. And, and that I want that life-changing experience because I missed out on it last time.
Well, that is definitely going to be a recency bias, because if that happens to you once, you're going to take that baggage into the next time you decide that inaction is the best thing to do. You're going to be carrying that baggage, and that's going to make it even more difficult to sit there and be patient. So yes, we go through all of these scenarios, and when our hands are inactive, and I'm just using hands as a reference to action, your brain is still very active. And so what happens is, a lot of times the action is to release the pressure that the brain is feeling, because your brain has so much activity going on with all the what ifs of what can happen. Taking action is a relief valve to all of that anxiety that you've built up inside yourself. And that's really why people have this action bias. It's because they feel discomfort. They feel discomfort with the situation they're in. Taking action relieves that discomfort, even if it's the wrong decision, because doing nothing is sometimes more difficult than doing something.
Yeah, it's like when we become traders, like, okay, I am a trader now. Traders trade. Traders don't just sit there and do nothing, because that's how we're programmed before we enter the game. That's why your wife never understood that, because that's a very logical way to think about things. But, I want to reiterate this point, especially for newer traders. That is not what trading is. Trading is very different and very nuanced this way. So moving into the solutions part. Are you ready for solutions?
Yes, and before we jump into that, I just had this dumb analogy. Maybe it's a dumb analogy, maybe it's genius, we'll see. I just had this analogy of fishing. If you take a look as trading like fishing, you do your research of where the fish are. You throw in your bait or whatever it is you're fishing with, and you see what you get. And some days you get some bites, some days you don't get any bites, some days you get a couple of fish, and sometimes you just hit gold and everything's going your way and you get a whole bunch of fish. That's how trading is. And I don't know if that's the correct analogy for where we are in this podcast episode, but you really have to approach it is that, look, I'm going to do the fishing based on my rules. And if I get fish, I do. I get them. If I don't, I don't. That's the action you can take. You have no control over whether that fish bites that hook. You have none whatsoever.
Yeah, and I guess bringing it back to actual trading, you guys know, where I am in my career now, 15 years in. I'm kind of bored and just kind of over it at this point, but I still do it because it's profitable. For me, if there's nothing to do, I'm kind of happy because that's just less work for me to do, even though boo-hoo, it's a whopping 5-10 minutes. But then I can just kind of get on with the rest of my day. So, I mean, maybe that's kind of how I justify it. Maybe that's one way some of you older veteran traders can look at this. But in terms of solutions, I have really one way to kind of process this. And if it helps, it helps. But Rob, you have a lot more. Let me just go ahead and start with mine. I just want you to understand that, like we've been talking about before, trading is different than pretty much everything else. And understand, too, that even if you don't put down a single trade for a month, maybe two, and this is not going to happen often, but I have had it happen to me, you actually are trading. When you don't trade at all, you actually are still trading. It's all the same thing. Clicking a button and putting in trades and risking money is trading, and sitting back and doing nothing until your system tells you to, and being patient and understanding the process and embracing the long game is also trading. So even during moments of inaction, it actually is action taking, if that makes any sense. Not taking action is action. That's not some kung fu weird shit. That's just how trading is. So maybe if you can put that in your mind, maybe it'll ease your mind a little bit going forward and reduce that anxiety that comes with, showing up every day and not doing anything. And maybe going forward, it won't seem so frustrating. And you'll still be motivated to show up every day, even though you're not doing anything. Because let me tell you, that's really the only way to play this if you want to be in that very small 0.1% of people who actually get good at this and stay good at this for a while. That's the only way I can explain it to anybody. Rob, do you have better ways? You have a lot of options here. I see that.
Look, I love what you just said. And people ask me, what I do for a living, and there's, how many hours a day do you work? This is what I always say. I'm always working. I am literally always taking in data. I am always reading. I am always studying. I'm looking at politics. Yes, I like politics. It's something that I find interesting. But inside of that politics, I'm getting market data. I am sucking in data all the time. Everywhere I go, I'm looking, what stores are busy right now? Why am I looking at that? Because that might give me a little bit of an edge on some stock trading I want to do. So look, I am always trading. Always, always. And I want to go back to this fishing analogy because it's actually going to turn out to be a pretty good analogy. Just think about somebody who is a fisherman, and that is their livelihood. And they need to catch fish or they starve. Now, yes, they could sit out all day long at the lake or at the river, whatever, fishing, wherever you're fishing, and just throw in a hook and just do that constantly. But that's not going to yield the best results. So imagine this fisher person, I think that's the correct term now, a fisher. Let's say that they go home, and when they're home, they're tying different kind of lures. They're tying different kind of flies. They're researching what is the best reel, what is the best net. And then they're studying, water patterns. Where are the water patterns the best at this time of the year, this seasonality? Do you see that this fisher, and again, I think that's the right word, but I'll just use that, is constantly working. They're always working. They are always fishing. But if you equate having the bait in the water is the only time you're fishing, you aren't understanding the whole process of this profession. So I'm going to say the same thing with trading. If you think that trading is when you have your capital in the market, you are missing the whole profession. That is the least time-consuming part. That's actually like 1 to 2% of what being a trader actually is. The rest of the time is to be constantly thinking about these situations, constantly back testing, constantly thinking of new strategies, new indicators to use. That is trading. So you can spend as much time as you want on that, and that brings out beautiful results. And we talked about working harder, trading harder. That's when and how you can trade harder. But if you think that you can just throw in the hook into the water more times and be successful, you don't get it.
It's not mermaid, Father. It's merman. Yeah, but that's a really great analogy now that you've expanded on it, because really, yeah, it's an all-day thing. If you're sitting there improving your system, testing indicators, looking up new ways to do things, just learning more about the game itself. I do this with investing because I'm not an investor by trade. I had to get good at it. I had to become one of the most informed people out there so I could explain it to other people. You're always doing something. You're always taking some type of action, whether or not it's in front of the screen entering orders or closing out trades. Yeah, that's a perfect way to put it. You're still working. You're still being productive. You're still getting better. And you're getting closer and closer and closer to your goal. It doesn't always just involve the actual act of trading. So I think that's a perfect way to look at it. Look at the whole thing and not just that one little part.
Let's go ahead and cover really what we talked about, is that when you are in this situation where you have said, hey, I'm not going to take action, and you start to feel discomfort, and this is where being self-aware comes in. Hey, I'm feeling some discomfort of inaction, and I want to relieve that discomfort with taking action. I want to make a trade even though I know I shouldn't. I want to change the stop even though I know I shouldn't. I want to take action to relieve this pressure. What do you do when you're feeling that pressure? Well, the first thing you need to do, as much as you possibly can, is to predetermine the possible future situations where taking no action is best. This is called future pacing. And you can use this as a sales tactic where you actually, if you're a salesperson, you'll actually tell the person what it is they're going to do in the future. You're going to say stuff like, hey, you're not going to buy this today. I understand that, but you're definitely going to be back here in a week buying this from me once you go home and do the research. That's called future pacing. That's you telling the person what to do. You need to do this with yourself. You need to be like, hey, in these situations, these are the situations you shouldn't trade. So you should already be watchful and wary for these situations. And you should have rules built around those. If you start to feel that pressure, how can you release the pressure without blowing it by taking action? Well, here's just a few ideas. Demo trade. This is a great method, especially for people in the beginning, to release that pressure. To release the pressure, and they say, okay, look, I really want to act here. I think it's the best thing to do here. So I'm going to leave my real account doing what I planned on it doing, and then I'm going to demo trade my stupid idea to see how it works. Look, I know it's just brain semantics. Who cares what happens in a demo account? But that is going to release a little bit of the pressure. And especially if you do this in the guise of, hey, you know what? I'm going to do this 20 times. I'm going to stay with my system over here with real money, but I'm going to demo trade my crazy ideas over the next 20 times, and then I'm going to compare the results of my demo account to my real account to see if I want to make a change. These are all just lies that you're telling yourself, but you see that with that lie that you just told yourself, your brain can shift. It can be like, oh, okay, this is now an A/B test. I'm doing something. I'm going to A/B test it to see if me blowing my rules early are actually beneficial to me. You've just taken the pressure off. Look, I know it's a lie to yourself. It's okay to lie to yourself if it gives you the results you want. Patrick, what do you think about that?
I don't even think it's a lie. I think it's actually true because that is part of the overall game. Let's take it back to a goalie in soccer. Maybe you're on a really good team and the opposition barely gets any shots on goal. So you're mostly getting paid millions of dollars to stand there. And maybe people might become critical of that. And maybe you feel like you're not really doing your job because you're not contributing to the team. But what people don't know is all of the stuff that happened that week leading up to the actual match itself. There's a lot of mind-numbingly tough work that people don't want to do that leads up to that moment, that gets you ready for those moments where it is time to pull the trigger. And so, like I said, I think you nailed it so good 5 minutes ago, Rob. If you just take a more holistic view of that and understand that trading is a lot of things, not just actually trading, then I think it's going to make a lot more sense, and it's really going to calm you down during those inactive moments.
I'm really glad you brought that back around, because I was envisioning all the hate that you were going to get from goalies when you said, yeah, they just sit around and do nothing. I thought, uh-oh, this could be potentially dangerous.
Yeah, the really good ones kind of do on certain days. But, a real soccer fan understands, that's part of it. Sometimes you do a lot, sometimes you do a little. That's just what it is.
I know the pro goalies are constantly studying penalty kicks. They know the numbers. They know that, okay, when Messi gets up, he goes to the left bottom corner 27% of the time. He goes here 12% of the time. They know this stuff. So, look, no hate to goalies. We know you guys are awesome. I'm just kidding. All right, so that's one of my ideas I have to take the pressure off by saying I'm going to demo trade my dumb ideas and keep my system intact over here, and then I can compare them. The other thing I want to bring up is removing the ability to act. And this is something that I had to do in my life. And I've told a lot of my stories of when I was a younger trader. Overtrading was a big problem for me. Impulsive trading was a big problem for me. And so I couldn't get over it by discipline. I just couldn't manage it by discipline. So I had to put roadblocks in my way, so I literally couldn't take action. So if you are in a situation where you're feeling like you want to release that pressure by taking action, well, the best thing you can do is remove all the stimulus around you and remove the ability. So look, if you don't ever look at a quote, so let's say you get into a trade, you get into pound yen, you've got your stop, you've got your target, and it's just driving you crazy to sit here and watch it, get rid of it. Get rid of the stimulus. I have traders all the time that will delete their trading apps. They'll just delete their trading apps off their computer and off their phones, to where they literally can't. Now look, I know you can always download them back. So yes, there's going to be some ways for you to screw it up. But what they do is they basically remove the stimulus. If you remove the stimulus, you literally can't have those feelings anymore, because you don't even know what's happening. So Patrick, have you ever had anyone do that?
I'm pretty sure I have, because I told him to, and that's where I was going to kind of chip in here. This is something that I should have made a dedicated video or podcast episode on back in the day, but it was just one of the points I made in a separate video. And I told everybody, because I know, especially as men, we all think this, that as soon as we start becoming a trader, we're going to kind of have that trader lifestyle, to where we got the app on our phone and we're always checking our trades and stuff like that. I'm like, guys, that is the dumbest thing you can possibly do. If you have any trading platform apps on your phone, get rid of them now. And I guarantee, as soon as I said that, 99% of people out there were like, what? Why? I'm a trader. I need to have this app on my phone. I'm like, no, you don't. Maybe in absolute emergencies, but kind of like you said, Rob, in that case, you can just go ahead and download it again. But it is not doing you any favors to sit there and look at it, especially if you are a daily chart trader like we are at No Nonsense Forex. You only need to trade for 15 minutes a day. You only need to be there for 15 minutes a day. If it's not in that 15-minute window, what the hell are you doing looking at your trades? What net benefit are you trying to gain? Spoiler alert, there isn't one. So take that shit off your phone. And I'm so glad you mentioned this too, Rob, because there's probably a lot of people listening to this podcast right now that may not have been with me back then, or may not have saw that video, or may not have caught what I said. But let me reiterate it again. Take all trading, unless you trade on your phone and you don't have a laptop. That's the only exception I'll make here. Get those apps off your phone to prevent you from ever looking at it when you shouldn't be looking at it, because we all know what that can lead to.
And you can download that app years later when you are a rock solid trader that has no hint of breaking your rules. Then it's okay. But I agree with you, Patrick. At first, it's really going to hurt you. All right, one of the things I had to do, and I've told this story many times, so I'm not going to spend a lot of time telling you, but I would give my wife the security card I needed to log into my account. Anytime I wanted to log into my account to make a trade, I needed to put in security codes. So I gave it to her, and then I literally couldn't log into my account and change an order. I couldn't delete an order. I couldn't do anything. And so I basically made it to where I couldn't take action. And okay, I will tell more of the story. The first time I talked her into giving it back to me, and then I blew it. So I told her, whatever I say, I'm going to be very convincing. I'm going to be very good. Do not give it back to me. And she didn't. And I tried like one or two other times, and she didn't. And then you know what? I quit. I quit trying to get it back from her because I knew I wouldn't. And you know what happened? I started to like let go and just realize, oh, the trade's going to do what it's going to do. And I was no longer thinking about it. And I knew that there's nothing I could do to take action to change it. And I was able to follow systems much easier. So if you don't have a security card on your account, then you could do something like change passwords. So we talked about accountability in the last podcast. If you have an accountability partner, this is a great way to use them. Hey, I need you to go in, change my password, and then don't give it back to me until next Tuesday, or give it back to me next Thursday, or you figure out some time for them to tell you what the new password is. So these are all ways for you to basically make it to where you cannot take action. And the last one I want to talk about is automation. Automation. If you use automation, and again, automation is this catch-all term for program trading. Theoretically speaking, a basic stop order is automation. When I started trading, we didn't have them. You had to have a mental stop. You actually had to be there and click it when it broke through the point you wanted it to. This is automation. So use the automation as much as you possibly can, and that way you already know that you've already predetermined the action. When you know you've already predetermined the action, it does take a little bit of the pressure off of you to like relieve that, because you already know, hey, it's taken care of. Like in the Flat Earth Trading Society, we had a 2x ATR. There was no pressure. There was no worry. There was no anything. I knew that ATR, that 2x trailing stop ATR would take care of itself, and I didn't have to really worry about it. So again, remove your ability to act, change passwords, delete trading apps, automation. These are all ways for you to help yourself in the situations where doing nothing is the right thing. It helps you actually follow your plan.
And people who have been with us since the very beginning of this podcast, I'm going to say it one more time. A lot of these topics and a lot of these anecdotes you have probably heard before, but this is not without thought when we do this. You know, we knew from before that the FOMO episode, the boredom episode, the extrovert episode got some really good feedback, and it wouldn't have gotten that feedback had it not applied to a lot of you, and it had not touched you probably in some way. And so it is worth expanding on these topics, and we hope you got a lot out of this. And on that note, that will do it for this episode of the Trading Psychology Podcast. Rob and I will both see you next time.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he always is, he is literally half the age of Warren Buffett. That's how young this man is. It is Rob Reinhold.
Wow, that really shows that age is all relative, because all of a sudden you made me feel young when I was feeling old. So that's how I'm going to look at it from now on.
And you should. That's how I look at my age, too. And speaking of Warren Buffett, we are taking a bit of a detour this time around. And if you hate the fact that we're doing this, you can blame me. This is my idea. But Rob and I both have spoken about this a little bit in the past. We really think it's important that everybody here, since you are financially literate, trading has that effect on people, that you do whatever you can, no matter how much money you have on you, to invest some of it. Because having it sit there doing nothing is actually far more harmful than risking it in the market, especially if you already have an idea of what you're doing. So Rob and I are going to go deeper into the investing psychology aspect of things. And I'll be honest, Rob, no matter how long this episode goes, and I hope it doesn't go forever because you and I could really go here, not enough time is ever spent on investing psychology. I mean, think about it. With trading psychology, how many episodes are we in now? 73, 74? I don't even know. And we still have more to go. I hate it when creators come out with a psychology video and it's 15 minutes long, or even if it's an hour long. That is not enough time. And we're going to be guilty of the same thing here when it comes to investing psychology.
There really isn't anything out there on investing psychology, because I think their whole point they're trying to make is there is no psychology. There is no feeling. There's no anything. It should just be methodical. Now, that's not how human beings work. We're all emotional. We all have moments. And so it's just not discussed at all, where we discuss it a lot in trading. But investing, they just kind of pretend like you're going to be a robot and do it perfectly.
And that's never the case. I mean, I know it's anecdotal. I know it's TV. But if you remember the show Billions, Wendy was the investing psychologist for the whole firm. And, they were paying her millions and millions of dollars to do it because it really is that important. And everybody there has some type of issue that they're trying to work through. So, yeah, like you said, you should just be neutral. But in trading, we should all be neutral robots too. Yet, 73, 74 episodes into things, here we still are with people listening to our episodes every single day. So, let's never not underscore the importance here as we go forward. But Rob, I saw you injected a phrase here at the beginning on our sheet. It says Rob's rant on trading versus investing. So before we officially get started here, let's go ahead and hear what you have to say here, and I'll let you know if I agree or disagree with it.
First, let me get up on my soapbox, make sure that I'm ready to go on this. All right, when I started trading back in the late 90s, when I told people, I didn't want to tell people what I did for a living because, first of all, I was new at it, and also there was a real negative connotation to trading. And whenever you told people you were a stock trader or a trader in the markets, it was always negative. And I got a whole bunch of stuff like, oh, that's just gambling, because on TV, on the financial channels, which was all that was around back then, it was widely said that the only way to make money in the stock market is to buy and hold. That was the only way to do it. And as a trader, traders were just scum. They were gamblers. They were never going to make it. And then all of a sudden, 2000 came along and everyone started getting into trading. And then all of a sudden, when I told people I was a trader, I got people saying, oh, that's so cool. I'm dabbling a little bit too. Let's talk about it. And it got widely accepted as a legitimate profession. And on TV, what happened was they couldn't just jump from trading's okay, or trading is terrible, to trading is okay. So you started to see shows like Mad Money and shows like Fast Money, where, hey, they're talking about trading, but they still did it within this investing mindset, where they'd say stuff like, oh, this is a great company long term. I'm going to buy it here at 50 and sell it at 55. And I'm thinking, what are you talking about? That's trading. That's just trading. And they're like, I'm going to invest in this stock. And then when this happens, I'm going to sell it. And I'm like, that's trading. That is trading. And it has always bothered me that basically CNBC and the powers that be have fused investing and trading together. And the problem is, when you invest like a trader, you're going to blow it. You're going to blow it because that's not the game you're playing. You're not playing the game of getting in and getting out at the right times. That's the world of trading. Investing is you're putting money to work and you're going to leave it there forever. So I want to start off this episode with that in mind. Investing is different than trading. If you're going to be in a stock that you bought it and then you sold it 10 years later, guess what? That's trading. That's not investing. So let's get into what investing is.
Yeah, I think we should, because my definition is going to be a little different. I do agree with your sentiment that it's frustrating when they take something like investing and make it more trading-like. I always say trading is trading, investing is investing. Investing should be long-term. I don't think, whatever vehicle you get into has to be there for the next 12, 15 years. I think you should have the intention of it being there for a while. But that's neither here nor there, really. That's just a definition, and ours are a bit different.
Well, Patrick, I actually want to argue about this now. So basically you're saying time frame. Time frame makes it either trading or investing. Well, what is the time frame? Have we come to a determination as a human society on where the cutoff is between trade and investing?
So I'm looking at the definition of invest right now. It says expend money with the expectation of achieving a profit or material result by putting into financial plans, blah, 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 blah. It doesn't really give a time frame. So if a time frame is not in the definition, then I suppose there really isn't an agreed upon one. So that's all I will go with. As far as what it should be, doesn't really matter. It is whatever it is. I would love to be able to just jump into some of these companies for 15 or 20 years, but I know that things change over time and things develop over time, and sometimes better replacements come in. So if I'm going to invest in AOL, I would love to hold that for 15, 20 years, but it might not last that long. It's just one of those things. So ideally, yes, I think it should be what you just said, but I think there is a little more of a skillful way to play it if you have particular skills. And that's what I want to transition to right now, is that I really think, like I said, no matter how much money anybody has, everybody should be investing. Because if you've been following this channel, or if you've been following any of Rob's material, you understand charting. You understand psychology. You understand money management. 98% of investors out there do not. They might understand one aspect of it, or maybe two, but never the combination of all three. Even if you look at major firms out there, think like a Franklin Templeton or something like that. The majority of people in that building are not actually making moves. Your financial advisor probably doesn't really know how to invest that well. They get the directives from above, and they know how to sell it to other people, and they know how to deal with their nonsense along the way. That's why they get paid. Don't sit there and think it's a bunch of really sharp traders and investors in that building. It's very few. So just know, if you have that trifecta, you are already an elite company. And if you are not putting that to work in the investment arena and not just the trading arena, I'm not sure what you're doing, because I'll say it too, Rob, and feel free to counterpoint or expand on any of these points I'm making. Your whole trading investing account shouldn't just all be in trading. Like if you just have cash and then everything else you have is for trading, I think that weighting is completely out of whack. I think that's just going to make it harder for you psychologically to trade if you don't have your money spread out in other places.
I agree with everything you just said. So we are on the same page as far as that goes. When you take a look at investing, one of the things you just said was diversification. And this is one of the things I know that I want to talk about in this investing podcast that we're doing here, is that investing is a different game than trading. When we are trading, we are identifying an asset. We are going to be buying it or going short in it with the expectation that it's going to do something over a certain time frame, and then we're going to get out. We are only interested in the price action and the profit, and that's it. And the only way we can win the game is to get that process right. What I really want to talk about in investing, and you pointed out diversification, don't have all your eggs in one basket. Investing is making money from things like diversification, things like compounding interest, where you're not necessarily like identifying the best asset to buy and sell at the right time. What you're saying is, I'm going to play this game where through diversification, through dollar cost averaging, and from being a good steward of it, that I make money. And it's not so much about the individual investments you pick. That is very important in trading. It's the most important thing in trading is what you pick. When you pick to get in it, when you pick to get out of it. In investing, you're going to win the game through compound interest, diversification, and time. And that's really the point, at least I wanted to get out in this podcast, because I think people try to play the investing game, but they don't understand that that's how they're going to win it. They're trying to do it through the trading game.
Yeah, and I just want to